Welcome back. We are minutes away from President Trump's speech here at the Treasury Department's Trump Accounts Summit in Washington. I'm joined now by the man who helped jumpstart this entire initiative to create investment accounts for children, Brad Gerstner, Altimeter Capital founder and CEO, the founder of Invest America. This is your baby.
It's incredible. I mean, it's incredible.
Remind
First,
us
it's great to be here.
Yes, thank you for doing this.
It's great to be here. 4 years ago, coming out of COVID, I showed my children at our kitchen table their investment accounts. And my then 14-year-old said to me, what about all the kids who don't have these? And it led to a discussion.
Oh, so it was your 14-year-old's idea, not yours.
Right, and he asked the question, what are we going to do about it? I talked about it on CNBC in October of 21. It went a little viral. I founded the Invest America Foundation, which led to the passage of the Invest America Act. And I have to tell you, Sarah, it is totally surreal to be here today in this incredible auditorium and talking about something that I think is critical to the future of America, right? Too many kids have been left out and left behind. Too many citizens feel disconnected to the American dream, and it all stops today. In 2026, this year on July 4th, every child born forevermore, think about that, forevermore, this is the magnitude of Social Security, will get an investment account at birth seeded with $1,000 in it. Moms and dads can add to the account. Companies can add to the account, like a 401k, and we're going to announce hundreds and hundreds of companies.
Already seen it.
States can add to the accounts. Philanthropists like Michael Dell, who I was just on stage with, can add to the accounts. If you start with $1,000 and add just $750 a year, it's $50,000 at 18, it's $200,000 at age 30, and it's $1 million at age 55. This is a game changer for America.
One sort of question and knock around it is that it won't do enough to help low-income families. Right. And sort of fight the inequality because it's opt-in.
Yes.
So, and it's any income level can do it. So it'll just be for a bunch of rich kids.
Let's say off the top, this has been a major focus from the beginning. It's the 50 million families who are currently left out and left behind. So the first thing, it's one click to claim your account. It's a form in your tax form. All you have to do, they're going to say, hey, you have a child that's eligible. Do you want it or not? So we're going to do everything to reduce friction to get all of those families in the pool and involved. That's our key performance indicator. Number two, my kids aren't going to benefit from this. They already had an account. The kids who are going to benefit are those who are, unanimously out of the game today. And so it's a kid in inner city Trenton or rural Mississippi. They will now be in the game of America, invested, direct shareholders through the S&P 500 in the best companies in America. And then finally, what I would say is this. I just said on stage that I'm going to contribute dollars to kids in Indiana. Michael Dell's going to contribute dollars. We have philanthropists across the country that are going to claim every state in the country. And we're targeting the kids in the bottom 75% of the income, right? So Michael's contribution is for the zip codes where the median income is $150,000 or less. So I think this is going to be plenty progressive.
All right, let's talk about your stock portfolio. Broaden the conversation a little bit, because today we start to get earnings from the Mag 7, Meta and Microsoft after the value. Microsoft, what I think one of the big questions going in is what did the CapEx numbers look like to see whether the sort of momentum around the AI trade can continue. What do you expect?
Well, I mean, unquestionably, we're in the middle of the largest infrastructure build out in the history of compute. We have a massive compute shortage in this country, and the reason we're short is because the value of AI to enterprises and to consumers, whether it's ChatGPT or whether it's Claude Code, is so great that the demand on those is for more tokens than we can possibly generate today. So for the NVIDIAs of the world, the ASMLs of the world, the SK Hynix of the world, all the companies that are in the compute value chain, the CoreWeaves, et cetera, they have more demand than they know what to do with. So pricing is going up, margins are going up, revenue's going up. That's where we have the majority of our portfolio. Now, for the Mag 5, for the Amazons and Metas and Microsofts of the world, they're the ones spending the money to build out this compute.
Does that continue to spend at double-digit rates?
It continues in a massive way this year. The spending, the CapEx from that group alone is going to be over $500 billion this year. So I think it's critical and great for the country that we get this build out, but make no mistake about it, all the shareholders in those companies know, they've messaged it well. They're going to continue to invest aggressively because it's a high ROI investment for those companies to make.
Is it a high ROI investment, and when does that start to show itself?
Well, we already see it. I mean, Azure would not have its growth rates, AWS would not have its growth rates, Google would not have its growth rates if they weren't renting out NVIDIA GPUs in the cloud to all of the customers who are using them today. So I don't think there's a debate as to whether or not they're going to see a return on that. The debate has been, are they over-investing, right? And we'll know they're over-investing when we have excess supply, when we have dark GPUs. Remember back in 2000, we talked a lot about dark fiber. Only 7% of the fiber going into the ground in the year 2000 was being utilized, 7%. Today, it's 100% of the GPUs that are being built out are being utilized.
Right, so I was going to ask you why you still like sort of the infrastructure, picks and shovels part of the AI trade. If you think it's going to really result in high ROI, why not broaden it into some of the beneficiaries?
Well, it is broad. We have over $1 billion invested in OpenAI and Anthropic, large investments in both of those companies. We had large investments in lots of other private AI companies, and then the public markets. When I invest in Gemini, I'm investing in Google, I'm investing in Gemini and AI. When I invest in Amazon, I am investing in AI. So those are the apps that are going to power, kind of the next leg of growth for all of these major companies. I, as a shareholder, am glad to see them investing aggressively in compute. In fact, what I would tell you is they didn't invest aggressively enough over the last 2 years, right? If you look at Amazon, they have shortages they've talked about. Microsoft, shortages that they've talked about. And that goes to show you, as much as people want to criticize Sam Altman on my podcast, Sam Altman has been out in front for 3 years telling the world that we're walking into a compute shortage, and here we are in 2026 with a massive compute shortage.
Speaking of, are you going to participate in this next round? We hear that they're raising more money.
So, I mean, if and when OpenAI raises more money, and I think there are a lot of people who would like to give them more money for their next round of financing. We're here celebrating all these kids' accounts. They deserve to share in the upside of AI.
Why, you think OpenAI stock would do well right now?
I think it'll do terrific. There's a lot of FUD in the world, fear and uncertainty about OpenAI. And if these were public stocks, everybody would say Anthropic's doing great and OpenAI's doing terrible. OpenAI just announced in the last few days that they've added $1 billion of API revenue in the last 30 days. The reality is the tsunami, the tidal wave that all these companies are surfing is so large, they're all going to do well. Sure, they'll compete one against the other, but OpenAI is doing great. Certainly there are things that I'm sure they know they got to do better. Same with Anthropic. But I'm excited to be a large shareholder of both of these companies. Are
they raising another $100 billion right now?
I think the company has talked about their intention to do it. You've seen reports out there about major companies like Amazon and SoftBank and Microsoft and NVIDIA that may be looking to participate. I'll let the company announce that, but I will just say this. When you look at the financials for the business, it is a great thing for America that we have the leading labs, the leading chip company in NVIDIA. Imagine America without NVIDIA. Imagine America without OpenAI and Anthropic. It's a great thing for this country that the leading AI companies and chips on the planet are here in America.
Okay, so you're doubling down on that, even though there are questions that it doesn't, has to spend a lot. I think another $100 billion reflects the fact that this is just going to be so costly to build out. They have to borrow a lot. They have to do all these deals with customers like NVIDIA to get it done.
Let me challenge this assumption a little bit, okay?
Okay. You're the one who challenged it with Sam Altman.
No, but I was giving Sam an opportunity, as I shared with you when we were in Pebble Beach, to explain what I thought was increasing fear and uncertainty about OpenAI that was not warranted, okay? So here's the situation. They have reported they ended the year with over $40 billion of cash on their balance sheet. If these reports are true and they're going to raise another 70 to 100 billion, they would have over 100 billion of cash on their balance sheet. That is a fortress balance sheet. Now, on the other side, how much are they spending? Well, a year ago, people thought that they were going to go build all these data centers that were going to cost $50 billion a pop. I haven't heard them break ground on any data center. I hear Microsoft building data centers, Oracle building data centers, CoreWeave building data centers, SoftBank building data centers. They're buying the tokens that come out of those data centers. And when they buy the tokens, they have revenue coming out the other end of that. So from my perspective, Sam got out there and he cajoled the market to build more compute. The market responded. They're building more compute. And now they have cut deals. They give them the option, right? They give them the exclusive right to buy the tokens that get produced by those buildings. They don't own the buildings themselves.
Okay. Brad Gerstner, thank you very much.
It's great to be here. Thanks for having me.
It's great to have you, especially at an event that's so meaningful to you.